Let me unlock this damn rotate. How are you guys doing? Can you first of all, before you do anything, give us a like and a share so that we can get the stream numbers up straight away. But we would really value that. I've got this device and it's too fucking clever for me. I think it's prevented me from putting it in landscape mode. Are we in landscape? Can you see more breadth, or are we vertical? I don't know. Let's see. Yeah, I think we just carry on as we are and hope it turns out okay. So crypto markets, let's talk about the crypto markets. So our favorites at the moment for this alt run has shrugged off. The electric storm, I'm calling it an electric storm. So here's the key thing between us, HVF Method, and many others. I saw a number of big YouTubers all saying how great the Bitcoin chart was looking in and around the 51,500 as it was heading up. And that was key levels of significance. So we directed our community. You would have seen a small edit of one of the premium clips we gave our guys, reducing our assessment to reduce all leverage, not blue pot, all leverage trades and leverage tokens out as you were running the 51,790. The irony is, and I do check what other guys are doing and saying, just more out of interest as what retail technical analysts are also thinking and doing. And a couple of big follows, many of them much larger followers and channels than ours, were saying chart looks awesome, buy. We're gonna run. And the absence there is the absence of understanding on key levels of significance. Bitcoin made a 61.8. It also made a flat bottomed, which is a tiring HVF's target. This is super, super significant. And that was the reason why we took everybody out, and we felt that there would be a hit coming, a bolt of lightning, as I said, in an electric storm. Now, as fast as an electric storm can show up, it can also dissipate. So on balance of probabilities, understanding we can always be wrong, we're talking about the future for which we haven't yet visited. We're using an excellent methodology, but we're also imperfectly interpreting it. We said, yep, you want to be out, you want to be closed all leverage, you want to lock in. If you'd done that, guys, you would have locked in the all-time highs of your account P&Ls, because you should have been heavily long alts, particularly Solana that we've put through you, also including Hex, ADA, and also including FTT, which has just snapped back up also to its previous levels. Other key tokens of alts that have outperformed really, really strongly. You would have also had the likes of VET close on target. You would have had the likes of OMG close on target. We said don't hold or overperformance those. In our premium area, we had a spate of HVFs make target. This is the key thing as well that was warning everybody that this particular snapback, this electric fence event, electric storm, electric fence, it's all electricity, that's what you get with me, was coming, is that a high number of alts had just targeted it out also on where we were expecting it to go. Liking the comments, I can see them. Yeah, keep commenting and sharing. Well done to you if you closed all your leverage trades. So you would have locked in your target, your all-time high on your account after a major alt run with a multitude of overperformance. You would have continued to hold your soul for macro overperformance. We see this as an 80 billion token in the short term to catch up with the likes of Cardano, and I expect actually to even surpass Binance token. And all of these multitude of other rivals for Ethereum, and become one of those serious contenders for it. And we would definitely, I think this, I'm doing something super stupid here with this. I can't read your comments, and I'm pretty sure this thing's recording in portrait. But you're going to have to forgive me because this is ad hoc and it's more about the message than the view. I hope you're getting a nice view, by the way. Go ahead and live a little in this crazy world. Anyway, so Solana is virtually at all-time highs again. Inside the community, we said despite that electric fence smackdown, that's going to probably generate another upside HVF, which it did. These other guys, bless them all, they're all good guys, and we'll be wrong on days that they are right. as well. It can and will and shall and has happened. They don't have HVF method, and they don't have the notion that the broad alt market that we called long before they were bullish, the Bitcoin bull that we called long before they were bullish on the falling wedge. It's about being early and getting it right, and then getting into the alt strongly and heavily, and then getting out. Alt runs disappear as fast as they show up. People don't realize that. They get giddy and drunk. How many times do I have to tell you the story about the coked up party with the strippers that everybody gets caught by the coppers because they can't bear to leave? You are absolutely drugged. You are drugged. I use these analogies for reasons. You're in a state, a drugged up state, where you think it'll never end. It's too much bliss. That's what happens in alt runs. That's why the bulk of retail get their ass properly kicked. They don't realize we're at the height of the party, as your favorite song is coming on and you're on the dance floor with three of the hottest girls. You've got to actually say, guys, I've got to go. And you've got to grab your keys before someone shoves that tequila slammer down your gullet and gives you some sort of narcotic or whatever the case may be, and you're losing your head. And you leave, and you get home and you have a great night, and you find out the cops arrived 15 minutes after you left. How many times do we have to give you that analogy? Not just for humor and entertainment, because it's the hardest thing to do in the absence of process and method. That is why. It's the goddamn hardest thing to do in the absence of process of method. You were all drugged up. Your P&Ls were flying. You didn't want it to stop. It's drug inducing. You're checking endorphins in the back of your brain, dumping, dopamine, everything. It was all going down, and you didn't want to end. And that's why you got caught when the music suddenly stopped. And I understand that. But you've got to have the stoic discipline to say, now's the time that we want to head out and we've got to go. And HVF method gives you that. It said, you need to be out. You need to be out. You need to be out. None of these big guys that I was looking at, they were all turned super bullish. Bitcoin's in a breakout. Bitcoin's in a breakout. Not looking at the 61.8 level, the fact that it was in an upside break with a target that was low slung and tiring. That rounding that I warned, you're going to get one more move up before it dies. So if you get these calls right, and this is where people say, oh, well, of course, it's very expensive. Mate, if you don't save by getting out at the top and bargain basement buying now for the future, because I'm saying to you, on balance of probabilities, in our view, you're gonna start squaring up and you're gonna have a reasonable rally. I don't think you go straight into a new high. There still was a little bit of there was some venom in that slap. But you're going to rally back up, probably for a secondary localized high, and then you'll ease again. We're probably going to go into a winding up level. You don't just leave the 61.8%. Everyone is so simplistic. Oh, you ran it, you got a slap, that's it, now you pump to new highs. That is why we were different, and we called the first cup gold nugget, and nobody else did. Because we got the secondary high at 13,900 on Bitcoin, and then it went all the way back down and traded sub 4K. Everybody is just pump new all-time highs. It's so binary. It's so black and white. There's no understanding of price behavior. And in the same way, you're going to rally now, and it is a bargain basement pricing point, but that doesn't mean now you're going to run the previous highs. On some tokens, the relative strength provers, which we have been focusing on, and we've even given some of them free to you, not all of them, but some of them, if you haven't had the ability just on some of this free view to earn your way into a community, you've not been listening. You've not been listening, and you've not been implementing. And I need to chastise you sometimes, a little bit. You got to stop. You got to understand where there is real insight and the value of key levels of significance and how price behavior plays. If you're not here to learn something and you're not wanting to be better, you're just wanting a feed, you're always going to be reliant on whether the fishmonger guy throws some free fish off the back of the truck. And sometimes he ain't coming your way, and sometimes you ain't getting fed. It's sometimes pretty frustrating. And a lot of the guys, there's no exam or license for technical analysis for someone to start a YouTube channel, I'm afraid. You're going to get get as patchy a standard as you're going to get, as if there was no medical degrees and everyone who wanted to call themselves a doctor called themselves a doctor. There's no university degree for technical analysis, although I've done about 7 or 8 courses. I'm a certified CMT. I've done all the traditional technical analysis. I've taught it in an academy. I've studied under Jeremy Duplessis for point and figure. I've gone to Larry Williams programs and courses. I studied the Gartley pattern under Hartley's, and I said all of that contributed to my development, but what I trade is HVF, and it's the best of it all, and it's self-derived. But you'll get some other guy who thinks he's learned what a moving average is, and he opens a YouTube channel. So it's like every third person in your street is a doctor, and you're going to them for medical advice. I'm sorry, you've got to pay attention. You've got to pay attention where there's insight, where someone says something that isn't. And we're kind of glamming ourselves up. We get a lot wrong, just like anybody else, because you're talking about the future. But if you haven't understood that, and you couldn't have earned or saved yourself, it's not also the extra money you made by being heavily in FTT, heavily in Sol, heavily in the right tokens. And I've mentioned Hex many times before. People don't like it. I'll keep saying it though. It's not only those calls, it's the money you save when the slap comes. People don't realize compounding. If your account was worth $75,000 at the all-time high of this alt run recently, just prior Bitcoin, and you got out, you saved yourself losing $25,000 if you had a handful of leverage trades, 2 or 3. That's what the average man that I've spoken to saved themselves. And now you're buying at those lows again, so that when the alts get to the same level, instead of being 75K, you're 100. And everybody else is trying to just get back to where they once were. And if you can't see the value of not being wrong, then and not wearing the elevator down, then you are not seeing the value of timing and how the market is. And I wanted to just do a quick stream for you on that. And I can say to you now, overall, that on balance of probabilities, we will float up. But it doesn't mean an instant new high float up. We're going to need some structure, because we've got to leave that 61.8% on Bitcoin, and it's a golden mean. It's huge. There was a cluster of key levels of significance: the 50K, the 47.5K, the flat bottomed target that gave you 51,750, and all the guys that were giving pumpermentals saying that's it, Bitcoin's got the best chart now, it should be heavily leveraged long. We're not doing key levels of significance. Do not understand the significance of the fact that when you're actually already going up and the chart looks good, it's about ready to meet a key level and change. So you have voids and vacuums and high proliferation areas where you move quickly from one zone. And this is where understanding of volume by price, where you've been validated at the head and shoulder neckline so many times, 47.5, and the next level is 50. You don't spend much time between there. You pump through it, and then you get validated at the 50, resistance, and then the next key level. Where is that next key level? So it's like mining, where you have a lot of soft soil and you have a couple of layers of hard igneous rock, and they don't do that research. It's just, oh, chart looks good, Bitcoin bull, and it's I get a bit frustrated because there's no quality control on that, but at the same time, we're never going to be all the time right ourselves, but we will have done, at least you'll know, we will have looked hard at the situation and from many angles, and we use a very, very good probability based method. Click the link below, go book a call if that makes sense to you. Anyway, so a lot of our community guys were in the right tokens on alts, closed significantly, and are now bargain basement hunting, so that the next time these alts are at that level, and in some cases they're already surpassed, they're at new all-time high accounts, while a lot of people got wrecked by that sell-off. I'd be frank, it had one wave of selling, and then it had a second really heavy wave of selling. If you're watching that on the 50 or 30-minute chart, it went all the way down to a 44K, and the extremist it was 42K, and it sat under that 44K, and that Bitcoin structure nestled under a funnel that we'd drawn, that it broke on the downside for that same upside. So it was a complete slap in the face. And we warned it. We used the phrase lightning bolt will strike. A lightning bolt is fast, violent, volatile, aggressive, and it sends you down. and many people were put into the top of that Bitcoin move only to ride an elevated journey down. And that's frustrating to me because that's retail stumping up their tokens for the like of institutions and the pump and dumps, and it'll always come at the key levels. Anyway, so just wanted to say hi to you, check in with you because we hadn't spoken much. I'm away, I'm enjoying myself. The market's right. I'll be heading back to the normal settings soon, and I just wanted to say you'll get your chance to make it all back, but don't just assume now you're going to run straight through all-time highs. Too much binary thinking, too much recency syndrome. If it's recently gone up, therefore I'm just super bullish and it's bull. You've got to know your layers all the way along. Anyway, well done to those that executed well. Thank you for the shares. There's 94 thumbs up and 265 of you watching. We appreciate that. Give it a share and jump on it. If you want to save yourself some of this drama, and you won't save all of it all of the time, but if you can see the value of compounding and not compounding errors in what's going to be a macro bull market, you want to build your wealth and you want to protect your wealth. Other services that we are bringing more and more of to our community, then jump on, book a call, give us a share or a like, grab the free mini series. Thanks for showing up, and I will catch you again soon. And I'm going to try find the end the stream button. It might take a couple of pokes, but thanks all for showing up here.